The last few months have seen electric vehicle companies come under pressure, so I thought we'd take a look at one. This time, not Tesla, but the stock price of NIO has slipped back about 40% from the January all-time highs. So is there more weakness to come, or actually is this just a buying opportunity? I'll talk a bit about the recent earnings for NIO in a couple of minutes' time, because they didn't really help investor sentiment short term, although over the last couple of weeks we have seen a good recovery of $30. Clearly they've done really well since they came to the market. They debuted towards the end of 2018. The share price had risen tenfold by the time we got up to the all-time highs so far, above $66 in January of this year, but they've been under pressure since then. So as usual in this video, I'll talk a bit about why we're seeing the price hit, what the earnings were like, then we'll come back and look at this in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time round we'd take a look at the electric vehicle stock. NIO, clearly EV companies like Tesla, very much a favourite amongst private investors, lots of volatility. So as usual, in this video, I'll talk a bit about some of the recent news, the earnings for NIO, then we will jump back onto the platform and take a look at the charts in a bit more detail. If you're watching this and you haven't subscribed, if you could subscribe, it does help support the channel, and it means we can continue pushing out lots of content during the week on the various stocks that we look at. Right, let's get into it and take a look at NIO in a bit more detail. So just in case you're not aware of the company, they're based in China. It's a Chinese multinational focusing on electric vehicle manufacturers, and they were started in 2014. They came to the market in September 2018, listed in the US stock market. The shares debuted at around $6 a share, and this year in January we saw all-time highs set at $66 a share. So a great performance over slightly more than 2 years. They've got a slightly different approach to the likes of Tesla when it comes to charging their cars. NIO has built a network of battery swapping stations across China. So if your electric car is getting low on batteries, you drive in and the battery gets swapped over and you can drive off. And the company says this should take just 5 minutes or so. We have recently had the latest earnings for NIO. At the end of April, first quarter earnings showed a loss per share of 48 cents. This was worse than the market was expecting, and we did see the share price take something of a slide following those earnings. As you may be aware, there is a global shortage of microchips at the moment. NIO has said it's not going to be immune from the fallout from this, and it says that it is going to affect deliveries in the second quarter. I think the company was forecasting second quarter deliveries to be not that much different than the first quarter. It's had a tough time since those $66 all-time highs in January. Since then, at the time of recording, the share price has slid by 40%. That is a sizable slide. We have, of course, seen slides in the Tesla share price as well, which is an obvious comparison. But does this significant weakness since January represent a buying opportunity, or are there actually even more losses to come? In a second, we'll jump and have a look at the technicals, but first of all, let's talk about some of the key levels to watch. I think the most immediate hurdle on the upside, the highs from late April, coming around $43.25 a share. After that, on the downside, I think is where it gets interesting, particularly if we're waiting to see if we're going to get some sort of bounce and recovery from here. The most immediate level to watch on the downside, the low hit so far in this slide, so $30.70 from the 13th of May. We have seen the share price recover off that level. So as usual, let's put a bit of color on these numbers. Let's jump onto the platform and see what the charts look like. So let's take a look at the trend in NIO. We'll come back to that trend line in a second. But first of all, let's take a look at this 20-day moving average, the green line on the chart here. So traditionally, moving averages, very good in trending markets, will get you into the trend as the price moves above the moving average. We saw a move in September 2020 with the price traveling through $20, moving above the moving average. And it kept us in the trend for a big chunk of the move. Sold in December 2020, then back in again late December 2020, and then out up here late January. And at the moment, I think what's interesting at the moment, we have seen the price over the last week, once again, with the move through $35, move above that 20-day moving average. It will be interesting to see whether this signals the start of a more sustainable trend than we've had over the last few months. But I think that's something worth keeping an eye on. If we take a look at the RSI down here, I've got a 10-day RSI. The last signal we had off the RSI was an oversold signal, middle of May, which coincided, so far at least, with the low. We've seen a significant low for NIO down here. We have seen the RSI approaching the overbought area, hasn't quite got there yet. So again, some technical analysts may take the view perhaps we need to wait for a pullback here if we're really going to wait for a buying opportunity in NIO. We'll see how the next few weeks pan out. But I thought what was interesting was the trend. Let's just zoom this out. So off the May 2020 lows, this trend line was doing a great job right through to September, late September of 2020. Then, of course, the price accelerated, had a move away to those all-time highs in January, came back to it, spiked through the trend line, but held. It's not unusual to see small breaches of the trend line, holds, and looks like that trend was going to continue. But we can see since late March, we've seen the price move sideways and drift slightly lower. So we have fallen out of that trend. But just because a trend line breaks doesn't necessarily mean we're going to start a trend in the opposite direction. So it's at this point, I'd start looking at things like previous support and resistance. And I think what's interesting, the spike down we had in early March down to about 31.75. We did see that level breached fairly briefly in mid-May with the price trading down to $30.55. But we've seen a good recovery since then. So I think some technical analysts would take the view that actually $30 or thereabouts has emerged to be good support for NIO. So I think what will be interesting from here, if we do get some weakness, because you could argue that trend is still, or that correction is still in place. If we do get some weakness back from where we're trading now, $38.50, does $30 once again end up being something of a floor for the price of NIO? So some people, if they thought the worst was behind the slide in the price, it has slid 40% from those highs. Are we going to see it build a base above $30? So I think what would be interesting would be weakness from here and a bounce ahead of 30. So perhaps in the short to medium term, a bit of sideways trading, but let's come back to it and see if we do get a retest and a bounce of 30. That's it for the update in NIO. We'll come back to it over the course of the next few weeks and months and see how things develop from there. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.